Morning. It's Friday, 2nd May 2025. It's Vijay here. Welcome to yet another episode of Pre-Market Commentary. I hope you had a wonderful holiday. It was what I would say a very nerve-wracking holiday for the bulls because the last half an hour on on Wednesday, the markets came down significantly. So there was this apprehension that between 24 and 36 hours after Mr. Modi and the cabinet gave instructions to the armed forces that they'll have a free hand. So 36 hours are over and nothing seems to have been done today, which means again today, last half an hour, there will be a lot of panic or a lot of, let's say, apprehension because we are going into a weekend. So when war clouds hang over us, this is what we will have. More important, not equally important, is old theory that sell in May and go away. Today you will have a lot of people talking about sell in May and go away because that's what happened in the history, is what they would like to say. So today, apart from other things, let's just dig deep and find out what is the reason for this, whether it will happen or it's a myth or it's really a fact. So if you look at the US, for instance, US weak dollar is there. There's no growth. Inflation is rearing its head. Consumer is slowing. Housing is slowing down there. Then the social media bubble is there, which is the all these new age stocks. So you will see the pessimists talking about sell in May and stay far, far, far away. Okay, and let us see what history tells us. I have data of May to October. Generally, what it is said is that you sell in May and come back in end of October or early November. So this is data between 1970 and 2023. Unfortunately, I don't have data for 2024. But nevertheless, if you divide the year into two halves, that is May to October and November to April, you will see every single time the S&P, Dow, and Nasdaq on average has gone up. In case of S&P, it's gone up by about 6.5%, 7.6% in case of Dow, and Nasdaq about 8.8% over 53 years. In the second half of the year, that is the November to April, whereas the May to October is much lower. The averages, you can see 1.6, 0.7, and 2.9 for S&P, Dow, and Nasdaq respectively. So there is some theory there. Maybe it is interesting in the US, for instance, if you sell if you sell in May, then you will tend to make money, or you tend to lose less money during that time because there is a lot of panic sometime in September, October. And generally, many of the crashes have happened in October. Take 1987, take 2008, even 2024, I would say, as markets have come down significantly. Now, let's look at what's happened in India. Indian experience, if you look at, I've just taken the last 5 years. So in 2024, last year, we had the elections. We also had a peaking out of the market in September end. So October was a very bad month. June was quite bad in the initial days for the first 3 weeks. So yet, if you had kept holding from May and sold only in October end, you would have made 11%. This despite two major events. 2023, even if you had done that, you would have got 6%. 2023 September, the market peaked out temporarily and started coming down and only bottomed out on October end. So, and also there were state elections during that time. Yet you would have made 6%. 2022, the inflation was raging all over. Everybody was raising interest rates, including RBI, and yet one could have made 7%. 2021 was the second wave of COVID. It was just ending in June, July of 2021. Markets were in a bearish mode because of the situation. As far as the second wave of COVID was concerned, yet the Indian markets went up by 21%. In 2020, we were in the first wave of COVID. There was a lot of confusion, yet the market went up by 18%. So Indian experience clearly says in the last 5 years at least that they've had so many major issues between May and October, but still the markets have gone up. So this is a fact. It is not a myth anymore. So what happened on Wednesday was a sudden sell-off in the last half an hour because of the apprehension that something bad will happen over the yesterday. But nothing seems to happen. But so it ended Nifty Bank Nifty, everything ended much lower. But if you look at only the last half an hour average, then it looks good. But otherwise, significant drawdowns in stocks, indices. So that is 36 out of the 50. That is 74%, 72% of the Nifty stocks closed in the red. Sensex shows 46 points, but as I said, much a bigger fall. Bank also fell. Nifty Bank was weak for quite some time. So what did the institutions do? This is what I've been highlighting and harping. Institutions have bought about 20,000 crores in the last few days between April 15th to April 30th. So FIs are still net buyers. They have not sold. They have not abandoned India. The only people who are abandoning India are the Indians. So in the what I call the keyboard warriors, they talk about being patriotic, and if you're not patriotic, then you're a coward, you're anti-national. But look at what the Indian retail investor is doing. They're continuously selling. 20,000 crores has been bought by FIs, means who has sold this 20,000 crores to them is Indians. So ironically, FIs are holding the Indian market despite the Pahalgam crisis, whereas the keyboard warriors are left, right side, center selling, and some of them are short selling. So who are the cowards? If the people who are selling or people who are buying? And who are the anti-nationals? People who are keeping quiet or people who are short selling? So that, I think, labels one should introspect. So that was 1,800 crores despite selling. So what happened during the overnight? Dow Jones closed almost flat. At one point of time, it was very strong, but it closed flat. S&P did much better, and Nasdaq, of course, did much better. But all of them significantly off from their highs. FTSE, CAC, and DAX did not do much yesterday. Oil, Brent was down below 60, but because Trump has now talked of sanctions on Iran, suddenly it shot up from 59 odd to 62. But I don't think it will go above 65 because the structure is broken. It is now made a lower low. WTI has not got affected so much because you see that's made in the US. Gold continues to go lower. I have been bearish on gold for the last 2 weeks. We have sold all our gold Bs and we have moved to copper, as I keep mentioning. Silver has not fallen so much because silver did not go up the way gold went. Gold peaked out at 3,500 in this rally. I'm bullish on gold for the long term, but I think gold will struggle because everybody seems to be owning gold now. Zinc and aluminum did nothing. And GST data, if you look at GST data, GST collections have moved up by about 12.6%. Integrated collections are higher. On every parameter, GST data is much better. We were at one point of time talking about just 1 lakh crores. Now 2 and odd lakh crores seems to be very gettable, and it seems to be the new normal. Then the final thing about the war hysteria, the US has got into this, and they have said that they are supporting India, which is a very good thing. Russia is supporting India. EU is supporting India. Generally, we have the support of the world, so I don't see any reason for us to expect a kinetic war, which I mentioned some time ago when I met senior people in the armed forces who are retired today. US Defense Secretary reiterated strong support of US government in India's fight. They've also cautioned Pakistan. They've asked Pakistan to condemn the terrorist attack. And I believe that things will smoothen out over a period of time. Sure, we will retaliate, but I think the retaliation will be such that it will not lead to a kinetic war. So in conclusion, one can say, sell in May and go away. If somebody asks you a question, I would at least answer, nah. And that's where it is. So whatever you do, I hope it is successful.